it kind of requires, especially for me, just like a retraining of my mindset around it of like, okay, taxes aren't the enemy here. Not at all. I can have my own view on how they're being spent, but that's a separate issue, right? Like that's where voting comes in and that's where your civic responsibility lies. But when it comes to the actual payment and setting it aside and knowing that it's here and preparing for it emotionally, that's kind of mindset work.
Hey everybody, welcome to Women Take Stock. This week, we're excited to have two special guests, Julia and Philip Olson of The Art of Finance. They are going to help us look at taxes in a fresh way, one that doesn't make you want to hide under your pillow.
Or shotgun tequila.
Or whatever sedative your choice may be.
Yeah, but first, let's start the show.
We are four friends all at different places in our financial and personal lives looking to pull back the curtain on the seemingly mysterious, often testosterone-driven world of stock investing.
And if four women without business degrees can figure out the market as a side hustle, well, so can you.
Join us as we learn the basics, buy, sell, scratch our heads, hold our breath, commiserate, and celebrate, hopefully more of the latter. We aren't experts, so please note that this podcast is for general information purposes only.
Yeah, anything resembling financial advice is purely coincidental.
That said, we are hoping to make a little or a lot of money doing this. And if money is power, well, we want some of that too.
So it's been a few weeks since we caught up again. We keep doing this. I feel bad for our listeners because we've been a little bit slow.
It's been a crazy time.
It's been a crazy time. So forgive us that we're not, spitting out content every single day, but we're trying. We really are. It's just hard when you look at your portfolio, which unfortunately for me is heavily into crypto right now, and go from having like the best year ever to barely being above water, and for a brief moment there being underwater. Ouch. This past couple of weeks was a little bit painful.
Yeah. It taught us some lessons, didn't it?
Did it? I feel like I'm not learning the lessons I'm supposed to be learning.
Well, there are a lot of people who have been saying this bull market, both in crypto and in stocks, has made plenty of new investors feel like they're brilliant because everything they invest in makes money, when in fact it's just kind of an overheated market in general. It's also a good reminder of something that we've said before and we'll say again, that investing has to fit in with your regular life. We've all had a lot going on personally. And so you have to have the time and make the time to keep on top of them. So personally, I've been spending all my excess time, instead of talking about investing, actually just spending the little bits of time I can to actually monitor and figure out what's going on.
JJ, you make a really good point, because one of the things that I realized, especially with this, the volatility of crypto, made me realize that I don't have a schedule that allows me to necessarily constantly be checking and watching it. And so the types of investments I think moving forward that I'd like to invest in are ones that I can leave alone for a couple days, come back and look, and they haven't completely skyrocketed or plummeted.
But does that even exist? I feel like there's either short-term investing that you actually really need to be an active investor on, or you're investing for the long term where you can do what I've sort of done with my retirement investments, which is basically I don't look at it once or twice a year, or maybe every quarter. When I get my statements, I look at it.
Yeah. I mean, I think really what the distinction we're drawing here is between crypto and traditional stocks and meme stocks and traditional stocks. Because I will say a couple of weeks ago, Jen, at the end of the day, I was taking my relaxing walk along the boardwalk here at Lady Bird Lake. And I got a text from Jen in all caps saying, what the F is happening with crypto? And I was like, I stopped, and there, people were passing me with their dogs and biking. I stopped and looked and freaked out and pulled up my Coinbase app and sold half my Bitcoin right then and there because it was plummeting. But you don't have to do that with a Starbucks or a Sony or like those big companies that aren't responding and reacting to the statement of one person, Elon Musk. And so I do think maybe crypto it's more exciting. And you can make a lot of money, but it is also riskier, and you have to stay on top of it.
I mean, it's what everyone's always told us, right? With crypto, is that it can crash at any time. But the big question too is like, how it is a leap of faith, because if you really believe in the long-term value of crypto, you'd be like, okay, it's just totally crashed, so this is a great time to buy, right?
Right. That's true. And you would be like, oh, crypto's on sale, and you'd buy. And then what it did for me was made me realize I do believe in crypto, but I'm going to invest in the more kind of the greener cryptos. And so I did purchase a few of those. And it made me realize I need to be more diversified, because I don't want to rely on one stock to carry my entire portfolio.
Right.
Now, the person who's missing from our show today, our other Women Take Stock co-host, Dana, would probably have a different take on that, and would just say you got to hold. You got to hold through that.
Or HODL, or whatever they spell it, HODL. Because we're,
hold on for dear life.
The reason I didn't jump ship, though, is I realized that there are enough millions and millions of people out there that do believe in this. And so it's not going to go to zero, right?
Yeah, it's not going to go to zero.
It's not going to go to zero. And yes, I may lose some money, but I have been really good about not investing anything that I can't afford to lose, which is sort of the mantra we began with. What about the non-crypto holdings that you guys have? Like, how's that been for the past couple of weeks?
Oh my gosh. The marijuana stocks have been languishing or falling, though the news, I think it's been a bit of just negative sentiment that's not based on changes really in the businesses. So that I've just kept looking at them saying, someday. And and the other one, my Pinterest, that also dropped after they reported very good results, but they disappointed on user numbers. And so I think the market is just punishing them because they missed these user numbers. Overall, I'm still very bullish on pins. So
yeah,
this answers your question, Jen, about holding versus, ones you're going to go in and out of, and all of these. I've kind of set a mental level at which I want to sell them. So I'm waiting for that moment, and I'm happy to wait.
Yeah, and that is what we've been advised, right? Is you make a plan, you decide, I'm going to sell when it hits X, or I'm going to buy when it drops to, Y or whatever. It's a good thing to do. But until, if I'm not mistaken, you had some, what's the word I'm looking for? Some premonition that people, as the world would open up, may want to, lose weight or something.
Well, let me tell you, my Weight Watchers is doing fabulous. It's my best traditional stock. I must have bought it at just the right time, because it's been up 25% since I purchased it. Yeah.
That's impressive.
I was very excited that Honest Company went public. And Jessica Alba's company has been around for, I think like 7-8 years, and they went public. And I know you're not supposed to buy stocks right after the IPO. That's sort of traditional wisdom.
Yeah.
But I was so excited for their company to go public that I did. And naturally they're down a little bit, but again, I believe in the company. She's been expanding into.
Well, you met her, right?
Makeup. I did. I met her and interviewed her for Good Housekeeping, and I went out and I saw her lab where they make all of the products, and met her CEO, who's also Greek, my Greek brother. But I just feel like she had a real handle on the market, and they've been around for a while, and they're
how cool to be able to invest in something that you can really, really touch. I mean, you kind of know that company in a way that you don't know other companies. It sort of feels more personal.
It does. Yeah. It does. And I think that's one of the reasons why I dove in.
It's interesting, Tula, after we had that conversation about it, I went and did some research on Honest Company, because I thought, yes, there's this idea you don't buy right after an IPO as a retail investor, but that if you'd bought right after, Amazon went public and held on to it for a while, you'd be laughing now.
Yeah.
And it's interesting, I think, even within a group, a Women Take Stock group like this, where you're talking to friends about it and hearing what they're doing, and telling them what you're doing, and everyone's supporting each other. I went and looked at Honest Company, and I thought, actually, it's not for me.
Oh, interesting.
I'm not quite so bullish on where it's going, but this is what's really interesting, to kind of get these different perspectives and learn more about the different ways to evaluate or look at the outlooks of different companies.
Well, for Tula's sake, hopefully this stock will skyrocket. And next year she's going to have made so much money on it that she's going to owe taxes.
Yay.
Speaking of taxes, the other week, JJ and Tula, you guys got to chat with two impressive and knowledgeable people to help shed some light on the scary topic of taxes and, Tula, what to do if you're honest, things skyrocket. Should we take a listen?
Yes. And don't touch that dial. I promise you're going to be happy that you listened to the tax portion of this podcast.
Let's do it.
Let's do it.
We are so excited to have a couple of experts, Philip Olson and Julia Lorenz Olson. They are the co-founders of The Art of Finance, which is a financial planning and coaching firm that specializes in people who identify as creative. So people like tech designers or writers. They are also the co-creators of the PBS show 2 Cents, which is a series of, I find, very entertaining and educational digital shorts that teach about everything from home ownership to the psychology of investing to credit scores and taxes. So Julia and Philip, we're so excited to have you here with us today. Welcome.
Thanks for having us.
So tell me, how did you both get started in the world of financial planning?
I'll go first. Sure. So I didn't go to school originally for anything financial. I always kind of assumed I'd be a starving artist most of my life. I studied theater and thought I would just be a theater teacher and an actor for a good chunk of my 20s. And just so happened kind of driving around all the time to different classes I was teaching children's theater. I just listened to a lot of the radio and happened upon a couple of kind of financial Q&A shows that kind of got my imagination worrying about this kind of stuff. And I started sort of getting obsessed and going down the rabbit holes and reading all the books. And fast forward a couple of years later, I was really frustrated as a struggling artist and wanting to do something different. So I transitioned to become a financial advisor. I basically took an unpaid internship, studied to become a licensed securities broker and an insurance agent and all that kind of stuff. And it was a magic carpet ride of learning a lot about the very strange world of finance. And that was about 10, 11 years ago. I actually started it right after the Great Recession hit. Wow. And so my journey has been kind of coming in at the bottom and basically this crazy ride up we've had over the last decade. So I worked in the corporate world as a financial planner for about 5 years and then started our own firm about 5-6 years ago now here too.
And that's here in Austin.
Yep. In Austin, Texas, land of lots of tech creatives. So we're definitely amongst our people.
Absolutely. And Julia, how did you get started?
Definitely a very strange circuitous route. So we met in college and both of us were theater majors and, again, had really no idea about money other than I loved to spend it. That was about it. And, who doesn't, right? And well, believe it or not, I'm always shocked. I meet people all the time who legitimately don't like spending it. And I'm like, I
who
can't
are those
relate.
People?
But they exist.
They're the savers.
I guess, yes, they are what I would call the natural savers. I am not one of them. I am not one of their kind. But, all that to say, just assumed I'd also be kind of a starving artist. I was an actor for my whole life, starting 6 years old. That's all I cared about and wanted to do and happened to be actually particularly good at. So I was like, well, of course, this is what I'm going to do forever. But we got married really, really young. I just turned 20. And so we were kind of on our own a little bit earlier than our compatriots. Like we had to figure out, okay, we have to make our own money and save it and do things with it now.
No, adulting.
What they talk about. So, and then, a few years into our marriage, like Philip was like, hey, I heard this guy like Dave Ramsey is talking about all this stuff. I'm like, okay. And that sort of got us on track for like, this is a budget. There's an order for doing financial moves in that makes more sense than just trying to do a bunch of things at once. So these, concepts started to get ingrained. And especially when we started budgeting, I found a sense of real empowerment through that, because I always thought that like being good with your money meant you'd have to be like super good at math. And then at about the same time, Philip went into the sort of corporate financial advising world. I found myself as a mortgage lender. Yes.
What an interesting area to be in around this time.
Yes, it's a very, very strange time. But yeah, that must have been like 2010, somewhere right around there.
So we were like crawling
after
out.
the craziness. Yes, we're crawling out. And it was like, I mean, it was a sink or swim place to be. And I just somehow swam. I don't know how, because I did not know nothing from nothing, but it gave me, an education on how do you read credit reports? What do tax return forms mean? How do you talk to people about complicated financial products? It was a serious education in that. And so I took that, plus kind of becoming a budget nerd, plus Philip actually going into the financial advising business, that all of that just came to a head. And I was like, well, I want to help people one-on-one with their finances as a whole. And so once Philip got his CFP, I knew that I was going to be a part of the business. And I started out as just like our budget coach, because that's what I really cared about and loved.
Yeah. So and can I just, a CFP, that's Certified Financial Planner?
Correct. Yes, that's what he is. And then I recently got my own certification. I'm an AFC, an accredited financial counselor. Okay. So we both have fancy letters now.
Fancy. Well, I love too that you both came from a place of like, we don't know nothing. And then you learned, because I think that's sort of what a lot of our listeners are in that journey. That's what we are as well. And so it helps that you've been on the other side of it, because you understand when people come to you not knowing much, you understand what that feels like.
Yeah, I think too, that idea that, Julia, you were mentioning the jargon and whatnot. And that's one of the things I think a lot of people find a turnoff, that it is a world that seeks to exclude others, I think, actively, with a lot of jargon, complicated forms. Even letters, you're just saying, it's like, I don't think I know what the CFP means.
Yeah. I mean, if I can find myself here, anyone can do it. I'm pretty sure.
We definitely know what it feels like to have that intimidation, and just like there's a club and we're not in that club, and we don't know how to ever get there. We definitely have felt that feeling. And so a big part of what we do with our work now, both hosting 2 Cents and with our company, The Art of Finance, is helping people break out of that, because it really can't be done. Something we really both learned as part of our journey was that when it comes to personal finance, the math and the spreadsheets and the formulas are actually a very, very tiny part of accessing and hacking it. And now that we've kind of gone through all of the, the jargon and the technical stuff, we're on the other side very much realizing that the skills we acquired as actors and artists of just self-awareness and communication and listening and interpersonal skills is actually the primary, in our opinion, driver of long-term success on the personal finance realm. I would say probably 80% of success in personal finance is emotions, habits, self-awareness, that kind of stuff.
That's the tricky thing. Well, speaking of habits, we are coming up on the tax deadline, and we should all be making a habit of preparing ourselves for tax time.
It's always a surprise too.
It is. It feels like, what? I didn't know about this. So we want to understand a little bit more about just the basics of paying taxes on capital gains from the sale of stocks.
Yeah. So for the beginning investor, I think the most important thing to remember is that there's a really important break between 365 days or 366 days. So basically, have you had an investment for more or less than 1 year? That's what you kind of got to focus on. If you've had it less than a year, so if you bought a share of stock and sold it 100 days later, you're going to be paying short-term capital gains if you made any money on it. And if it's over a year, you have long-term capital gains. So which is better? Generally, long-term is better. The government wants you to hold investments longer. And so if you are able to hold it longer than 1 year, you'll pay a lower rate. Usually about 15 to 20% is the long-term capital gains rate. Okay. And if you hold it less than a year, your tax rate is actually going to be whatever your tax bracket is. So if you're in a 24% tax bracket, it will be taxed at that rate. So from a strategic standpoint, you're really incentivized to hold it long term from a tax perspective if you can.
Okay. Those are some good rules to keep in mind when you're selling and you're putting that away. But not everything is a gain.
Yeah.
Mm-hmm.
Yeah.
Unfortunately.
Unfortunately. Yeah. So, I really wanted to know, you always hear about people saying, oh, if you have a loss in your portfolio, that can still be good for offsetting things on your tax return. And so I'd like to understand that, how do losses from sales affect your overall tax picture?
So I think the easiest way to think about this is that your capital losses kind of cancel out your capital gains tax you might owe. So if you had $100 in short-term losses and $100 in short-term gains, you wouldn't actually owe any tax. So in a way, that's kind of a benefit of why you might sell something at a loss to cancel it out. Now, if you have any extra, it can reduce your just your income tax above and beyond any gains you have, but only up to a limit. It's not a very high limit. It's only $3,000. So if you had a $1 million loss and no gains, you can only write off $3,000 against your taxes.
That's not very much, but
no,
it's
it's
good.
not.
It's good to have that number in mind.
So that's kind of the general rule, is that they kind of cancel out, and just a little bit of overage still helps you out.
Okay.
And what about cryptocurrencies? Are those taxed at the same rate as shares?
I'm going to take these kind of series of questions here.
Yes, you should.
Just for our listeners,
Yes,
because
I think
the tax stuff is a little bit more my wheelhouse as we get to other things later. So generally speaking, yes, if you bought a portion of a Bitcoin, I guess that's what you would call it, or a fraction of a Bitcoin, and then sold it at a gain later, the short-term or long-term gains rules apply. Now you have to be a little careful, because a lot of these wallets and services that you have your crypto at, they're not very old. They're news and emerging technology. They may not generate any tax forms for you. So you're going to be the one to track this. You need to be careful about tracking when you bought it, for how much you sold it for, because you're kind of on the hook if you make a mistake. So you just have to be careful. Yeah. And something actually I recently learned about is that not all crypto profits, let's call them, is actually from gains or losses. So quick kind of caveat here. I was meeting with somebody the other day that purchased essentially a little device that processes transactions, and they get paid in cryptocurrency to do that. It's kind of like mining, but a little bit different. It's called Helium is the name of the crypto. And I originally just thought, okay, this is a gain. You're going to have capital gains on this, and that's that. But then I read up more on it later, and actually they were actually being paid in that as a compensation. And if you mine cryptocurrency, it's the same thing. Those are both actually self-employment income is what the government treats that as.
Oh, interesting.
Yeah, I just learned this. I did not know this before. So if you're a Bitcoin miner, or you have one of these little devices that processes transactions and you get crypto as a payment, that's not a capital gain. That is self-employment tax, and all the whiz bang stuff goes along with that.
Oh my God, that's part of the gig economy. Are these
exactly? That's exactly
mining?
Right.
Wow.
I think that's one thing I've noticed. I've traded cryptocurrency in a couple of different platforms or exchanges, and it's really interesting too that even in their reporting, of course, they keep track of how much money you've put in and when it traded, how many units you get, but it doesn't even tell you the price that it was at that time.
Right. So we would call that the basis, the cost basis for your crypto. And it's good to know going in that a stockbroker will probably track that for you, and a crypto probably won't.
That's really good to know.
Yeah, you do.
But to your point, Jen, the stakes are pretty high. If you have any investment and you don't know what your cost basis is, or you can't prove it, the government makes you basically treat it as if you have zero basis, which is not good. It's basically the whole thing is profit, even though that's not the truth. So you have a really strong incentive to write it down, as you said, or make a record.
Right. Pen, paper. That's the way I would do it.
Or really, you could track your receipts from the sales and then put into a spreadsheet, something like that, if you're really fancy.
I'm sure somebody has come up with some software, crypto tracking software.
For sure. It's out there.
Yeah. And if not, I just gave everyone a free idea.
There you go. $1 million idea right there.
Exactly. So I'm curious though, we talked about sale of stocks and we talked about sale of crypto. But what about dividends? Are those also taxed as income?
So this is the last one I'll have monopoly on. So there's actually two types of dividends, and if you are investing through any sort of major brokerage service, they will track which they are. So there are ordinary dividends, and those are treated as short-term capital gains. Mm-hmm. And then there are qualified dividends, which are treated at a preferable rate. I want to say 22%, something like that. You can fact check me on that. I'm not an accountant, but the difference, I think, kind of comes down to essentially how long the share has been owned. And if you own a mutual fund, that can be a little bit complicated and messy. So the nice thing is they take care of all that for you. Okay. And they will track if this is a qualified dividend or ordinary dividend. But no, it's not actually exactly the same as gains and losses. No.
Okay. So that's a vote in the balance for, or the ledger for having somebody managing your funds for you, because that's one less thing that you have to worry about.
Actually, no, you don't even need a manager. No. If you, let's say you just bought an S&P 500 index fund at Fidelity, very straightforward. You don't have a manager. You just have one mutual fund. It will generate dividends for you every quarter. And then in your statement, your 1099 generated, it will tell you. And I imagine even brokerage services for individual stocks, if you had a McDonald's, which pays a pretty high dividend, it would tell you, are these qualified or ordinary dividends? And then it would also automatically, calculate all the math for you if you just put that into, TurboTax or however you do your taxes.
Okay.
You don't necessarily need a manager to get that, is my short answer.
Good. We're all about self-empowerment here.
Right. You can do it yourself.
Managers are good in certain situations.
A caveat.
Yes.
So, I have a question for, I think it's more Julia's wheelhouse. And this is more about the kind of emotion and psychology side. Everyone, or at least most people I know, freak out when they hear
yes.
And often it feels like that emotional response or that anxiety, I know it even affects me kind of sitting down and doing my taxes because I get really anxious and worried.
Totally.
So is there a strategy or way we can think about approaching taxes and investments that makes us feel kind of calmer and more in control? And like, it's as much a part of our economic life as checking our bank statement.
Interesting. Yeah. I mean, it is kind of sad, when you think about it, because I do think that from a systemic point of view, there are lots of issues with how our government works when it comes to having people interact with and file their taxes. Like with 2 cents, we have a really large international audience, which like always blows my mind. I'm like, why are you watching this? But they do. And like, so many of them are like, it takes me 15 minutes, right? If they're in like Sweden, Denmark, they're like, it's nothing, right? There's just isn't that emotional, drudgery of it, which just really stinks. And it's really unfortunate, but it is the way it is. You can't change the fact that our system is crappy, right? That's not in your control. But I think what you do have control over is kind of your mindset about it, right? Because taxes aren't levied unless something good has happened to you, right? This is just a symptom of something great happening. You have made money in one way or another. Either a job has paid you or an investment that you made has generated returns. And now you owe a certain percentage of that to the government. And it's hard to feel great about it because when it comes to taxes, our perceived benefit is very low, even though every single day from almost the moment you wake up to when you go to bed, you're interacting with something that your taxes have paid for, right? The food that you're eating, the FDA makes sure there's no poison in it. You're paying for that. The roads you're driving on, your taxes are paying for that, right? The fact that your microwave doesn't blow up and set your house on fire. Taxes have paid to put those regulations in place, right? But we don't have that perceived benefit like you would when you go to Target and you give them $20 and you get a set of plates, right?
Yeah.
It's just not like that. So it kind of requires, especially for me, kind of just like a retraining of my mindset around it of like, okay, taxes aren't the enemy here. Not at all. I can have my own view on how they're being spent, but that's a separate issue, right? Like that's where voting comes in and that's where your civic responsibility lies. But when it comes to the actual payment and setting it aside and knowing that it's here and preparing for it emotionally, that's kind of mindset work of like, I get to pay this. I don't have to, I mean, kind of you have to, but I get to pay it, right? That's
go from have to get to.
Exactly. You don't have to, like, that's, I was like in my workout this morning and my favorite teacher is like, you don't have to be here. You get to be here. I'm like, that's right. I chose this. I get to be here.
I think also that idea, it seems counterintuitive, but you kind of referred to it there of, you put the money away. And so if you have an investment, you make some gains on it, you mentally or physically put that away.
Yes.
So ironically, if we think more about taxes kind of throughout the year, we'll be less stressed about taxes.
100%. Yes. Oh my gosh. And like, I can tell you like our budgeting system that we've put in place, because I own my own business, like right after I got out of college, I kind of started my own first business. I've owned, I guess, 3 over the years. And yeah, I just didn't know, right? Like, and I work with so many people who are like in their first year and they just don't think about their taxes being integrated in their life.
Right. Because we think about it. Yeah, is that once a year thing that we have to focus on.
When the bill shows up and you're like, crap, this sucks, right? We don't like being surprised by bills. But when you retrain your brain to think of like, this is how it works. Like we set aside for taxes every single month. We see what we brought in. We know our tax, our real tax rate and we just shave that money off before it gets put through our budgeting system and put to work. And like we make no emotional connection with that money or as little as possible so that when it does leave, it's fine. I'm not going to be crying about it.
Except you congratulate yourself for it.
That's right.
Going back to the idea of like, that just sort of blows my mind. That has completely changed my thinking. And I'm going to implement that this weekend when I sit down with all of my receipts.
I hope you do.
When you do put money away for taxes and you're doing it mentally, but are you moving it into a physical account or how do you handle that?
Great question. So we personally don't move it to a different account. We use a budgeting software called You Need a Budget, which is basically a very sophisticated envelope system, digital envelope system. So we just put that tax money in the tax envelope. And then whenever we want to, Philip, pays it, directly to the IRS on a quarterly basis or, whenever he does. So that's how we do it. But I have a lot of clients who don't use, this particular software that we have that do just the same thing. I coach them to see how much has come in gross, pay for your business expenses then, and then whatever's left over, you have to set aside a portion of that and just transfer it into a different account so that it's there, so that it's separated, from the workings of the business and you just pay it when you can.
And so you don't recommend necessarily putting it into like a year-long interest-bearing, low interest rate bearing account?
Not really, because remember if you're self-employed specifically, you got to be paying that quarterly.
Right.
So
after the first year.
Oh, right. After your first year. So, and even if you are in your first year, I like to train people to get ready to pay this quarterly, even though you don't have to right now. It's better just to get used to it.
Yeah. The amount of interest you can earn in a quarter safely is
the key word. Yeah. Julia, I want to go back quickly to something you said about not getting emotionally attached to your money. This idea of like, don't purchase the shoes in your mind with the full amount that you earned. And there's just so much about the psychology of taxes. I wonder if you want to talk a little bit about that.
Yeah, for sure. I mean, it's really, it's kind of the psychology of any money you make. I mean, money is a human construct, right? It doesn't mean anything in itself. $1,
Really?
what it means. I know.
It feels like it means a lot, but
I know, but that's because of our emotional life as humans. A dollar doesn't mean anything to a computer, but it means something to us. It represents something, right? And that's why, I always sort of push on people a little bit when they come to me and they say, my goal is to have this amount of money in the bank. And I'm like, that's not actually your goal. Your goal is to feel a certain way. And you think that this amount is going to make you feel a certain way. So let's get clear on what is your actual emotional goal? What does this money mean to you? Right? Like, what do you want to do with this money? Okay. Right. So
you have to do some self-reflection.
Yeah. Like I always ask yourself deeper questions of I think I want this. Why? Like ask yourself that's like a tool of 5 whys, get down to the real bottom of why you think you want something. And boy, that can have really large.
I know. I feel like I need to be on a couch for that. Laying down on the couch.
And sorry, with all this great advice, we not only have what you said here today, they can also go to your PBS show and tap into all that. So there's so many kind of ways to think about it. And I think this overall is what's so great about the Art of Finance and what you'll do is it's connecting that kind of bridging that creative, I'm not interested in finances idea with actually this concept of, yes, you can manage your money correctly. You can make tax season not a nightmare. And you can make your money life what you want it to be. And as you say, fulfilling.
Yes.
It's the Art of Finance way.
It is. So,
well, it's just like a holistic approach, right? Like people come to us thinking, for the most part, not everybody, but a lot of people think that the advice that they want is all strategic, like put your money here, do this. But really what they're looking for is a holistic view of their money and a emotional check of am I on track to get the things that my soul needs? Right. And that's kind of the work that we do. And it's important to ask beyond just when do you want to buy a house by? Why do you want to buy this house? What are you trying to achieve by doing this? And then, okay, maybe buying a house is a great fit for you. Or if what you're trying to do isn't actually a good fit for this use of money, then we need to talk about that, and show you other options that you can consider.
You got to get clear. I may book you guys in the future, in the very near future for a little of this. But in the meantime, listeners can go to theartoffinance.biz to learn more about Julia and Philip's approach. And thank you both so much for joining us. This has been incredibly illuminating, and I'm already feeling more empowered.
Me too.
Well, good. That's our goal.
Thank you, guys. Thanks for having us.
That was actually way more interesting than I ever thought talking about taxes could be. You guys had more time than me, though, to really think about it and marinate in this conversation. So a couple days out, what was your biggest takeaway?
What I really loved about meeting Julia and Philip is that they both come from a creative background. And that emphasizes to me that being good at taxes and finance isn't this magical skill you're born with because you're just naturally mathy. It's just, it's something you can learn. And also it just becomes habit. I love that.
Yeah, I agree. This idea of habit. And if you integrate it into your financial life, it doesn't have to be this huge, scary thing you do once a year. And I loved what she said about it's actually a good thing because you made money, therefore you owe money. And I talk about capital gains, focus on the word gain. you made a gain.
Yeah. You know, it's kind of cool if Robinhood or these different investment apps had something that you could see the actual gain, and then they would give you some sort of algorithm that would show you the approximate capital gain that you would have to take off of it. You know, so that you're not like, oh, I just made $100 today. It's more like, oh, I actually made $70 today.
Yeah, I mean, that so depends on how long you've held it in your income bracket.
I know, it's not
like
that
Philip
simple.
was talking about. But wouldn't it be cool if you could input that information so that it would calculate it for you? I bet there's something out there that does that. It's called TurboTax.
So yes, readers or listeners, if y'all know of anything, let us know.
Please do.
And what's really great, though, is that Julie and Philip were so cool, and they're coming back for another episode on an entirely different topic. Here's a little tease.
The two things that were really the most impactful for my own financial empowerment journey is that, number one, cash flow is everything.
Surprise.
Yeah, cash flow is everything. And number two, a certain financial move can be right in a vacuum, but you can do them out of order and in a way that actually doesn't lead to a happier, peaceful, more stable financial life.
And with that, if anyone has any questions or insight or anything you want to share at all, how can they get in touch with us?
Well, they can go to our website, womentakestock.com. They should definitely subscribe to this podcast. If you're just listening to it, hit that subscribe button. We're also on Twitter, Women Take Stock, and we're on Instagram, women.take.stock. And on Facebook, we're having some really good conversations over there. So join us on Women Take Stock on Facebook. Tell us what you're doing. We want to hear.
Absolutely.
And may you all have to owe a lot in taxes next year because you've made so many gains.
Yes.
Okay. Have a good week. Bye.